Today, we're going to talk about the biggest mistakes that we make in trading, a subject that I know a lot about. Not just because I've made a lot of mistakes myself, but we've been running this community for almost 4 years now, and I've spoken to a lot of beginners, and I'm very familiar with the common pitfalls that people tend to fall into. Now, making a video like this is really hard because it's not like I can hide from my mistakes. I don't get that luxury because I make all of my trades live here on YouTube, and you can go back and watch my worst moments on replay. But you kind of want to forget about it because it's kind of painful to think about. But at the same time, I've found that sometimes my pain can be your entertainment. And I think that we can have a lot of fun with this because there's some good stories in here and there's some really good experience that I want to share with you, especially for those of you that are starting out with trading. So let's do it. I am Speculator Seth, and I stream my full trading session every day from 8:20 to 10:30 Eastern Time. So make sure that you subscribe and click that bell icon. The bell icon will give you notifications when we are live each morning. Okay, so let's get this therapy session started. And as always, I love to hear from you guys. So let me know in the comments. I want to hear your stories too. Let me know, what was the biggest mistake that you made in day trading? So let's start out by talking about the worst mistake that I ever made. So my worst mistake that I've ever made, not checking for outstanding orders or positions before shutting down. Yeah, I really did that. I had a stop order that was sitting there, and overnight while I wasn't watching, that stop order got hit, and this was in the 10-year treasury. It went a whole handle and a half against me. It's really shocking that I didn't completely blow the account with that trade because it went like $1,200 against me, but it recovered overnight. And by the time I got there that morning, I was able to take it off at break even. Whew, yeah, that was probably the craziest thing that ever happened. To go along with that story, next one, trading the wrong thing. So this one happened very recently, the beginning of the year. I thought that I had put an order in on the micros, and it was actually in the E-mini. And yeah, I lost a lot of money on that, and I had to stop trading that account for a few months because of that mistake. So, but more so than that, it's also not just mistakenly putting an order in, but you should put some thought into what instrument that you're going to trade. One of the most common things that I see out there is new traders in futures that want to trade the NASDAQ futures. Man, I'm telling you, NQ is the widow maker. That thing moves so fast, you can lose money so quickly on the NASDAQ. And I think a lot of people want to trade it because it's volatile, and they think, well, I have the highest profit-making potential with the NASDAQ, but along with that comes the highest loss-making potential too, right? So I would really think about what instrument you're trading beyond just looking for the most volatile instrument. The best situation would be trading something where you understand a lot about it. Like if you understand a lot about central bank policy, then trading interest rates and treasury futures would be a really great thing. If you understand a lot about the oil industry and the geopolitics of the Middle East, then maybe trading oil would be for you, right? You want to have some sort of an edge that you're actually going to be able to pull out of that market, and something about that market that makes it fertile ground for you to exploit that edge. If the reason that you're trading an instrument is because it moves the most and it's the most volatile, then really what you're doing is you're just taking on the most risk that you can. And that's not something that tends to work out very well for beginning traders. So the next one that I want to talk about, and this is really the worst mistake that I think you can make, and that is doubling down on losers. It's so tempting, especially if you're trading with multiple contracts, and there can be situations where maybe you put one contract on and then it goes against you and you have the risk to be able to put another contract on. But certainly don't do things where you say, I'm only going to take one contract on this trade, it goes against you, and then you add another contract on and then try to get out at break even or something of that nature. This will always blow up in your face. So I've never done this, but I have seen other people do it. And one of my favorite stories, there was a guy that came into our chat room one day and was trying to promote himself, trashing everybody else and elevating himself and trying to pull people away to another room. So the first day that he started this other room, he was in a trade in the 30-year treasury and it went against him by about 8 ticks, which is about $250. And so he said, oh, it's okay, it'll come back. And he added another contract. And then he left. Well, that day happened to be the biggest trend day in the treasuries. And I think that overall he lost 2 handles or something of that nature on that trade. And yeah, he disappeared. Nobody ever heard from him again. Yeah, doubling down is probably one of the biggest mistakes you can do, guys. Don't do it. So the next mistake is not having an emergency stop. I have seen some really crazy moves in this market. We've seen days where it will move 20, 50 handles in the E-mini. And if you don't have an emergency stop, you're going to be eating thousands of dollars in losses instantly. Yeah, always have an emergency stop. And especially if you're doing things like you have a stop limit order out there to kind of protect yourself, you want to have a stop order below that is a full-on stop out just in case. All right, because you never know what can happen. For you guys that are trading futures, always think about that overnight margin level. The reason that level is the margin required is because a move like that happened in the past. And on a similar note, be very, very careful about if you hold something overnight, because really crazy things can happen overnight. There is a lot of edge in holding overnight, but you need to have a very large account to be able to handle a hit like that, all right? So the next one that I want to talk about is taking on too much risk compared to the reward that you're going to get. This is probably the most common issue that I see out there in trading right now. A lot of people will fight me on this one, but I have seen it ruin so many traders. So what I'm talking about here is strategies where you're taking like a stop that is twice as big as the profit that you're going to take. And you can work things out to get a positive expectancy. So if you're winning like 80% of the time and your losers are twice as big as your winners, that can still come out profitable. In fact, that's the way that a lot of high frequency trading firms are doing things. But you have to remember that those guys have really, really big accounts, and it's usually not appropriate for most retail traders. And there's a couple of reasons why. The first thing is that because your losers are bigger than your winners, when you do run into a drawdown, that drawdown is going to be really deep. And what I've seen happen to a lot of people is that they're not used to dealing with losers. And so when that drawdown comes, and I promise it will come, they don't know how to deal with it. And so it's really common. I've seen a lot of people that they've been trading really well for 9 months to a year and a half and really built up a strong account using a strategy like this, and then completely blow it all in one day. Yeah. It sounds crazy to blow away a year's worth of progress in one day, but I've seen a lot of traders trading strategies like that. They do it all the time. The other problem with strategies like this, and the main reason why I don't like them, is that it's difficult to know if your performance is due to your edge or the size of the stop. So if you have a really big stop, you should expect to win most of the time. But what happens if that edge stops being useful? It's been arbitraged out of the market. And it doesn't take a whole lot to ruin the expectancy of your system. So, maybe you were winning 80% of the time before, now you're winning 70% of the time, and you're not going to notice because most of the time you're still winning. Compare this to strategies where your winners are equal to or larger than your losers, you're going to be used to losing. You're going to know how to deal with it. And when you're getting a good win rate, if you're hitting 50% on winners that are twice as large as your losers, then you know for sure that there is a real edge in what you're doing. Another really common problem I see is not paying attention to news or economic numbers. So when economic news comes out, a lot of liquidity will pull. If you are trading on the DOM, you can actually see that liquidity decrease. So if you see the liquidity decrease, you should always be thinking, did I miss something? But sometimes you can see really big moves off of the news and it will completely ignore almost anything else that you were looking at the time. I know that a lot of retail traders say that they ignore the news because they find it easier to execute on their technical edge. But the reality is that the news is such a significant and strong part of the market that it is going to completely wipe out almost anything else that you can look at. So you really cannot afford to not look at the news. I highly recommend getting a news squawk. I know it costs a lot of money, and that's why a lot of traders don't do it, but Financial Juice has brought the price of that down a lot. I would really recommend looking into that. If you have the money, I love Rand Squawk. If you really can't afford to put money into it, then you can at least use Twitter, and you can use some of these free economic calendars like the one at Forex Factory. But you really have to be aware of when news is coming out, guys. And on the backside of that, when you see a freak out of nowhere move that appears to be based off of news and you don't know what the news is, I would be very wary about getting into a position off of that, because that might be all the move was. Or it might be something really big that's going to cause it to move all day. You don't really know that until you've read the news. So don't trade it until you know what's going on. If you don't know what's going on, then you do not have the edge. Next mistake I want to talk about, and this is something that we've talked about on the channel before, but spending too much on education. As a beginner, it's really intimidating to get started in trading because there's so much to know, and really how much you know about the market is a really big determinant in how much edge you are going to have. It's not like education can't help. There's a lot that you can learn from education. The issue is just that when you're starting out, you're not going to have that context to know what it is that you really need to learn, and you're not going to know which players are really respected and can give you a good education and which people are just kind of scamming you. So if you're just starting out, I would recommend just start trading. Trade and learn as much as you can. And if you've been trading for a few years and you're still not having success and you still feel like there are big things about the market that you don't understand, then you can start thinking about trying to get education. So the next thing I want to talk about is when you should trade live versus when you should trade sim. So something that happens to me probably every 3 months or so is I'll have somebody come into the live stream and it's like their first week of trading and they're already close to blowing the account. You have to understand that trading is very, very difficult. And if you are just starting out, the chances of you blowing the account is really, really high. So I know that a lot of people will slam on trading sim because they say it's not the same thing and you're not going to develop the same emotional guards that you need and so forth. But the issue is that if you don't have an edge yet, you are not going to make money. And not only are you not going to make money, but you're probably going to lose everything that you have. So I would not recommend going live unless you already have some experience under your belt of several months where you're making money. And during that period when you're testing things, I would look in particular at what your maximum drawdown is. What is the biggest period of losses that you had during that period? And then look at the size of your account and say, am I comfortable with that, right? Like if your maximum drawdown is like $1,000 and you want to trade a $1,000 account, that's probably not going to work out, right? So don't let people shame you for trading sim. It is smart to have some experience before trading live. And it's okay to trade on sim for years before you get into that spot, because finding and developing edge is really hard and it's not a one-day thing, but it is smart to preserve your capital. All right. The next one I want to talk about, and this is the biggest issue that I've had, is trading slow days or around holidays. So my worst losing days have always been on range bound days. I think that it's going to break out and it never happens, and I'll lose over and over and over again. The more money that is coming into your market at that time, the easier it is going to be to make money from day trading. So if it's a slow day and there is not a whole lot of business going on, there's really no reason for you to be trading. So some periods that I would be particularly aware of, the worst is that week between Christmas and New Year's. Don't trade. I don't even stream during that time. Now, there was that one year in 2018 where a lot of crazy stuff happened that week, but you know what? It happened because there's less liquidity during those times. So I would still recommend just ignoring it. Don't trade during that time. It will always screw you over. Another time period that I would be particularly aware of is the summer. We had a really great summer this year, but it is usually not like that. I always trade just sim during the summer because I've had historically a very difficult time trading in the summer. So again, if it's slow or it's the holidays and people are on vacation, don't trade. Well, I think that's all that I have time to fit in today. I've already spent way too much time trying to record this video, but please, if you enjoyed this content, give us a like. It helps the channel out a lot. And I will see you guys when I am streaming in the morning. In the meantime, stay profitable, friends.